Hey, Mark the Meerkat here with Grok Trade and the trade of the day. Hey, today's lesson is on let your winners run. Okay, let's take a look at K. That's right, Kellogg here. And this was after 30 minutes after the market was open, or about 10 o'clock market time. It has high basing up here. It was called out by someone. It was not on our radar, but someone's scanner, they picked it up and said, "Hey, look at K. It's high basing here, right under 55 even dollar amount." I said, I agreed with them, so I set a trade, was going to let the market come to me, that if it broke out above that $55 level, I wanted to be long. So I had the trade set. Let's see what happened next year. And for, whoops, a couple minutes there, and then boom, it popped up here, and I am now long at $55.11. I'm long on Kellogg K. So I automatically have a 1% stop that wherever I get in is exactly 1% behind here. So at 55 was where my 1% stop was. That it's triggered right away. Oh, not triggered. It's activated right away as soon as I'm in the trade. Now what I'm going to do is to reduce my risk from 1%. I'm going to bring it up here just under this line of support for that high base there. So now it's got the resistance line here, the 55 even dollar amount, the 20 moving average, and this support line here as a possible areas to prevent money from stopping out. We call those shields. So I'm right here. It's less than 1%. I'm happy with that. So let's see what happened after that here. Now it's just kind of chugging along here. And we're doing some other trades at this point. It was high basing again there. And now it's just still going. And now look at the volume that came in here. Boom, boom, boom. It's still going. Okay, well, we're just going to go ahead and be trading some others here. And now I'm going to bring my stop in the money here. I'm going to stay just below this blue line, this 50 moving average here. I'm in the money. Give it a little bit of room to run. The markets are slowly gaining this whole time. Volume is coming into the market. Upticking volume is coming into the market. Now here was it below 56. Just broke out from $56. And so I'm going to bring my stop up here under this 50 moving average. So it's about, 1% below it there, but I'm confident because the market's moving up and this is moving up very steadily with nice volume. We're going to just keep a nice wide stop on this so it could pull back a little bit if it wanted to. So look at that. It broke out from 55, 56, pulled back, tag 56, taking off again. Now this is taking a long time here, folks, but that's okay. Let's see here. Let's move this down a little bit here. And I'm going to keep bringing my stop up here. And now it's here up here to 56.50. And now I'm going to bring my stop up here underneath this 20 moving average now. But again, plenty of room here. It's about 0.5% here between where the price action is and my stop. But I'm clearly in the money here, probably 2% in the money where my stop is. So I have a guaranteed income trade. Now it's a matter of how much I can get out of this. So you see how I'm letting my winner run here. I'm not cutting the trade right off, and it's going up steadily. It's not stalling anywhere major here now. Well, now here at the 75 area, starting to base again a little bit, bringing my stop up here, keeping it underneath this area right here, and it can going sideways. Well, now what happens is that as this bases here for a while, the 20 moving average and the 8 EMA move very close together here. So I'm just going to say below this 56.50 for the moment. Let's see if it breaks out again. Oh, boom, there it goes. It broke out right to 57 even dollar amount. Boom, see how that just popped up there. So again, I'm bringing my stop up here a little bit right at the 56.70 area, 56.68, just below all these this base there, below the 20 moving average. Look at the volume when it broke out there. Wow. And now we're going to take a look at here, and now it's just kind of fluttering around up here, trying to get back up to 57. We're now getting to the end of the day for trading for us at about 11:30 market time. I'm going to bring my stop up here just under that 20 moving average, and we'll see what happens here. And it kept hitting. It's going back up, and it hit its head again on this 57. Looked like it was not going to break it. Again, we're now at about almost 11:30 market time when we like to finish trading. So I'm going to go. I went ahead and I just brought it up here, and I'm out at 56.90 on the trade. So let's take a look at this whole trade here. So going back here, we had a high base, and then we broke out and we got long, and then it was just drifting up, but very slow and steady wins the race. We call this a Grok Pot trade, and it keeps working way up. I kept moving my stop up, and then finally, when it wouldn't break this 57, and given the time of day, we're going into lunchtime, I went ahead and I took it all out here at 56.90 for 3.2% in 1 hour and 29 minutes. Hoo-ah! Now, interestingly enough, then after it hit that $57 area high, what did it continue to do? Look at that, just drifting back, drifting back, drifting back. And here at 12:36 now, uh, it did pop up there. We're at 12:36 market time at this time of this recording. It has not gotten back above that $57. Ooh-ah. So this was just one of 11 trades that we had today here in the Grok Day Trading chat room. And first 3 out of 5 trades we closed were for expense trades. And in the order that they actually went out, the first 3 were actually expense. And we were down over 2% here. But then we came back and we had a nice big, this is the trade here on K that I just showed you. But because it was over an hour and a half, I did do other trades in between there. So net for the day here, we were at 7.9%. But look at this, we were 8 out of 11 for 72% success rate. Now, because tomorrow is the 4th of July, Independence Day, the markets are closed, and we're going to do a lesson day on Friday working in the sim account. So for the week, we were at 20.1% return on risk. Our target was 5% per day. And again, if you invest $10,000 per trade, then each 1% that you make would be equal $100. And we have a 1% stop, so we're risking $100 per trade. So today, this week, we ended up about $2,100 for 6 hours worth of work. Hey, good work if you can get that. Well, this is Mark the Meerkat. Hey, just remember that anything can happen. This trade was already up 3%, and people say, well, why are you going to get in it now? It's at 3% in high basing. Because anything can happen. When it breaks out from these trading patterns, the odds are in our favor. I take the trade when the odds are in our favor. And in this case, I got another 3% out of it. I'm happy with that. Have a great Independence Day. This is Mark the Meerkat. Trade well.